Hey everybody, welcome. We are beaming you live in another year actually, but it's real time for you from the Starship Enterprise. So we got Captain Kirk right here.
How's it going, everybody?
It's good to have you. And then we've got Jack Santaniello. You might want to say, hey there, Jack, so they can see your cool background.
Hey, hello. You know what you need though is the Shoemaker logo underneath YouTube.
Yeah, we're gonna have to work on that. I've got
my
Scotty working on it, but we've got him actually in the engine room right now. So
Yeah.
Anybody dialing in, you know the rope. Thank you first of all for joining us for another day of fun and frivolity. And we do actually have some interesting information that's worth having a conversation about. So we'll dive into that. If you would use the chat to harass us and make your comments, but do send the Q&A, use the Q&A to ask questions. So we got some new information a couple days ago on the whole employer responsibilities for withholding and some of this stuff that maybe it was an unintended consequence, I don't know, but that's why we've got caution tape behind Jack. So Adam, you want to talk about it first? You want to launch in?
Yeah, absolutely. Welcome, everybody. To try to keep it fresh, Jack and I are going to be in an escalating war of interesting backgrounds. We thought about doing the Millennium Falcon with Gary and I being the co-pilot, but decided to dust out the uniform for this one to address some specific questions that probably are going to come up later on. Yes, it is a real shirt. Yes, I did buy it at a Star Trek convention. Yes, I have had it since I was 20. And yes, I have worn it on Halloween and special occasions since then. For those that don't know, my wedding walk-in song was also the Heroes song from the end of Star Wars. So I really am that cat of geek. God bless my wife for agreeing to let us play that. Got a lot of thumbs up from the guys as we were walking in. Anyway, the couple things that came out this week. Sorry, I'm making you disappear, Gary.
The transporter. We're having some technical difficulties with the transporter.
Yeah, just FYI, what we found is you have to keep your positions relative. Wrong theme there, Joe. What we found is you got to keep your positions relative. But the couple things that came out this week that I found interesting, and shout out to Omar for bringing it to my attention. Earlier this week when we had a call, it's forgiveness applications have started to come out, and people are starting to find, or just get more visibility in terms of how they think the rest of the year is going to shake out. A lot of folks have a lot of cash sitting on their balance sheets, and I think on the one hand, hey, we want to honor the intent of PPP. At the same time, I think Jack and I have been pretty clear in our opinions that the whole point of the program was you didn't know it was going to happen. And if you hadn't got the money, then perhaps you would have made different decisions. You were able to, preserve jobs and, blah, 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 blah. Should anybody be enriched or not? Yes or no. At the same time, I could make a case that, well, look, had there not been a pandemic, I'd be really, really up. Instead, we're flat or down. So I'm whole, but not as whole as I should have been. That's a long way of saying that I personally don't feel a lot of guilt about having some extra cash on the balance sheet post PPP. So then the question is, well, because it may be needed in the future, depending on what happens, or it may not, who knows? So the question that we've been getting a lot of is, well, what do we do with the extra cash? Because the other side of that equation is, for years we've been advising clients, keep only as much cash on your balance sheet as the minimum as you need. And, minimum that I need is really associated with your tolerance level for risk, because if you got excess cash on your balance sheet, A, it's not working for you, and B, you get sued, they're coming after your balance sheet. What's the most liquid thing on your balance sheet? It's cash. So we started having a lot of conversations about what to do with any extra cash reserves that have been developed. And, we've been very cautionary up to this point around, let's wait and see what happens with PPP forgiveness guidelines. And even if you do take a distribution, don't go buy, a new house, keep it in cash, just in case, or keep it in something that's highly liquid, just in case for some reason something crazy comes out that it needs to go back in. So what was brought to my attention, and I don't know if this is the first case or not, it's just hysterical and highlights some stuff that we've talked about in the past, is that there has been the first prosecution over misuse of PPP funds. Case hasn't gone to court yet, but arrest has been made and charges filed. I may get the town wrong. I don't know if it was Jacksonville or Miami, but someone got PPP funds and then, at a later date, bought a new car. Seems perfectly reasonable. Got
Lamborghini.
funds. Well, you're stealing my thunder.
Sorry.
Yeah, you're stealing my thunder here. It was Miami now that I think about it. So, at case value, like when you read that, if you just read the headlines, man, that's something that could really happen because, geez, I've got some extra funds. And if I distributed it to myself at the end of the year, just as the normal course of doing a distribution and distributing extra cash, it's hard to trace where that money really came from. And I could see myself buying a new car. Okay, peel back the facts of the case a little bit more. A, the car was a $350,000 Lamborghini. B, the gentleman in question also had many, many luxurious stays at local area resorts. So basically spending money like a drunken sailor. How he ended up getting caught is he wrecked the Lamborghini. But you trace back, but even then, really what happened? He bought the car in the company's name. Okay, but even then, what really happened? He applied for $13.5 million in PPP loans across multiple companies when his annual gross receipts were about $800,000. Bank of America gave him $3.5 million. Clearly, this is a case of falsified payroll records, which when we've talked about fraud in the past, I think we've been pretty clear that, look, if they're going to prosecute somebody, the likelihood is it's going to be around flat-out fraud. Flat-out fraud is called falsification of payroll records. And even though this hasn't gone to court yet, I think the likely answer is the guy did, make up payroll records, because Bank of America wouldn't have lent him the money without documentation. So the documentation he likely provided were falsified records, which just comes back to he applied for $13.5 million, got 3.5, but only had $700,000 in gross receipts. So clearly something's amiss in all of this. So I don't want anybody to get real panicked about, oh man, they really are, you guys are full of it, they really are coming back for people. Yeah, the people that committed fraud, not you, unless you committed fraud, in which case, yeah, they're coming after you if you wreck your $350,000 Lamborghini that you bought with funding. That was number one. The second is related to the payroll tax deferral. I reached out to our contacts at ADP, so thanks, Lakin, for getting back to me on it. ADP is still working through the mechanics of how to make the deferral happen and get it tracked. So what that tells me is that given that and this was, literally yesterday or the day before, what that tells me, given that I believe they're the biggest payroll company in the world, is that, this isn't going to be effective for anybody, even if they want it, until the middle of September, from a payroll run standpoint, because, if you were paid on the 1st, you already got your check. So that's just a statement that, there still hasn't been a whole lot of literally deep implementation guidance from the payroll providers on how this is mechanically even going to operate, because they're all trying to interpret the IRS regulations, which basically say, you give it to the employees and are responsible for over withholding to get it back. So if I gave Gary $1,000 of his withholding through the end of the year, what's supposed to happen is in the first quarter of 2021, I'm supposed to withhold $1,000 extra from Gary's paycheck to pay it back. Devil's in the frickin' details on this one, because the IRS's position is it's ultimately the employer's responsibility to collect and pay the money. Given that, my own feeling, and Jack chime in here, is that we're not going to find a whole lot of employers who are going to opt into this program knowing that they are ultimately responsible for paying the payroll taxes. And, it's funny because they try to give you a little out saying, yeah, but if Gary quits, you're okay to go ahead and withhold some more money from. What if he's freaking paid in full? What if I don't have an accrued PTO policy? So it's just, this seems, this isn't even soapbox. It's like it's an example of an unimplementable idea. So sorry we don't have more guidance on it, but if it was me at this point, I bet I would want to have a damn good reason for doing it, because right now it just all seems bad and full of way too much risk for the employer relative to the benefit that could be received on the other side.
Jack, you want to follow that up?
Sure. So I'll provide some color commentary in the order of issues as presented by Adam. So going back to the abuses question. So this is some information that's from one of the franchise law groups that I'm a part of. And, it's the source is a little bit political, but meaning politically slanted, but it had, the numbers are what they are. So this is an article that talks about House Democrats identifying billions of dollars worth of questionable payroll support loans. And they gave some examples. They said, in a preliminary analysis of the PPP program loans, which totaled $525 billion as of August 8th, investigators on the House Coronavirus Subcommittee, they found red flags in nearly $3 billion of aid after checking the information that borrowers provided against the Federal Business Registration Database. They identified 11,000 examples of businesses providing different addresses on their loan applications than the ones registered, including 7 businesses that provided the same seemingly non-existent address in Ohio in their loan paperwork.
See? Fraud!
Fraud. Yes, exactly. And so, and this article goes into some more of the numerics. And so that goes back to things that we've talked about as to the reasons why the pace is slower. It's because you have people on one side saying, we got to get the money out, we got to get the money out. And then on the other side saying, yes, but let's not get it out so hastily that we allow abuses like people buying stuff that they shouldn't be buying, and falsifying records and trying to not get caught. So there's those issues. On the deferral of the employee Social Security tax, I think it's clearly not a good idea to do. And I think it's a lot to put on, and I acknowledge and recognize these are desperate times for people with families surviving and everything related to. So this is really not a humanity, a comment of humanity, it's a comment of business, that there is a day of reckoning next year. And so, there's some clear bullet points in an article that actually Gary provided to us, which, I just want to reiterate a couple of things. Employers remain liable to collect. Employers remain liable to collect. Employers are required to withhold from January 1 to April 30th of 2021. If an employee is not employed for the full 4-month period that I just said, employer is still obligated to pay the deferred taxes. Employer, right? And then employees are permitted to make arrangements to otherwise collect the total taxes due from an employee. So I mean, maybe the biggest obvious issue is what happens if that employee leaves in January or February, or even beforehand, and you've given them this money. Employer, guess what? You're on the hook. You may have a contractual obligation from your employee to pay that money back if you aren't able to get it from them, but that's contractual. And the IRS, even though they're saying, hey, hey, why don't you try this, employers? They're not saying, and if you can't, and if you don't give us the money next year, that everything's okay, nice try. They're like, no, you get to pay it. So you get to pay twice. Similar liability as to when, a similar example would be misclassifying an employee as an independent contractor, and then government coming back and saying, nope, they're really your employee. Guess what? You get to pay us the payroll tax, even though you gave that chunk of money to the employee because it's their obligation to pay their taxes because they're an independent contractor. So same theory, same philosophy, which I think is detrimental to employers. So what is interesting though is that I wasn't sure if they were going to say employers, it's an employee choice to implement this program. In other words, all employers have to do it, and then the employee has to say yes or no. They're very clear that this is an employer's choice to do. So now it's not a mandate, but you may, as an employer, get pressure from your employees to say, hey, I really, really, really would like for you to do this. And so, that's a business decision you have to make as the owner and employer of a business. So.
All right, cool. You guys ready to launch into some of these questions? First of all, thanks for the chat. That's pretty funny. And no, I'm not Chewbacca. I'm Spock, man. So this is from Greg. Is the recommendation still to wait to apply for forgiveness for the PPPs? Has there been any discussion or bills proposed to eliminate the taxability of any loan forgiveness? And will the 6 months of 504C loan payments, both P and I, be following the same taxability of the PPPs? Great questions.
Yeah, they are. So I'll handle the first one and maybe a little bit on the last one, if you can kind of take the middle, Jack, and any more details on the third one. But in terms of the first one, again, no brownie points for applying early. And so until the tax situation's resolved, honestly, the only scenario where I could advise a client to even get the forgiveness taken care of is a scenario where, because they had such a massive loss, the income was going to offset and land at zero. I mean, I just have a hard time asking somebody to come extra out of pocket earlier than they normally would have to until they get all this resolved, because there is precedence in the past that they do. In fact, in the CARES Act, there is a technical correction to the last tax bill around depreciation. So that's what, a year and a half later, they made a technical correction to the tax code that applied to the 2018 tax year. So there's a likely scenario where this doesn't get fixed until April, May of 2021. And I just would hate people to write checks on April 2021 when they could write checks April 2022 or no check at all. With respect to the forgiveness of the SBA 6 months, the hard part about that one is that I would see the IRS having a hard time saying that that's taxable, because the CARES Act specifically says it's not. And it also doesn't say the expenses that it can be used for. It just said, hey, to help folks out, 4 months, 6 months gone, shouldn't be taxable. So I don't know how the IRS would take a position that it's taxable income on that one. And I haven't heard of any interpretive guidance yet. So with that one, I'll punt to Jack. I'm not aware of anything on the deductibility of expenses with PPP, but I haven't followed the pending legislation as much as Jack, or stuff that's been written as close as Jack has.
Sure. So as far as going back to the first question about applying for forgiveness, kind of the same thing. I mean, we just don't know. And I think that even if if we knew kind of, or what we thought where things were going, it can easily change down the road depending on what actually happens, which is essentially, going into the second question which is, eliminating tax liability of loan forgiveness. It's, it's all the same issues. It's, give in one hand, take in the other. And if it's a net zero, then that's not really helpful. So they need to find a way to, truly give something to applicants and not have a detrimental effect of accepting their offer, which is essentially what happens. So if you get a benefit, but then it's taxed, or if you don't get the normal benefit of deductibility of expenses because it's been subsidized, then, are you really better off? And maybe that may be a little bit, but not to the extent that you would have been. I mean, it isn't to the full extent of the purpose of the help that the government is trying to give to you. So I think that, kind of all of those questions are basically, we just have to wait and see what happens because we don't know. And, I would hate, Adam would hate, Gary would hate to say, go down this path and then something be different. I mean, we're not concerned about telling you wrong. I mean, we are, but it's more of, we just, if we knew the answer, we would tell you, obviously, but we don't. So it's a wait and see, which is frustrating. We get it. And it's frustrating going back to many, many weeks ago for those people that gave back the money because they thought that, well, I'm not sure if I truly qualified. 9 out of 10 things I can check, but that 10 thing I'm not sure. So I'm not sure if I should have asked for the loan. And then they gave the money back. And then literally at the 11th hour, the government said, well, for certain loans at a certain level, we're not gonna kick the tires too hard on that. So, it's those kind of things. So we just, again, a common theme throughout these several months that we've been doing this is, and we just don't know. So sorry.
Yeah, on that second question, where has there been any discussion of bills proposed to eliminate taxability of any loan forgiveness? I'm trying to remember who it was that I had a socially distanced lunch with outside last week with, but their concern was they're not hearing anything. I know who it was.
Yeah, I don't think there's been any movement since. I know Grassley was one of the co-signers of the letter. I can't remember who the Democrat was, but I don't think there's been any movement since the original bipartisan letter was written to the Secretary Munchin and the head of the IRS.
And I would say, just to be clear, when we talk about discussions, we're talking about discussions at the highest levels, whether it's Congress or within Treasury or the SBA. Certainly, there are discussions going on by staffers of members of Congress. There's certainly discussions going on and positions taken by, for example, the U.S. Chamber of Commerce. So there are discussions going on. It's just that we're not getting any output from the places that are the ones who are going to tell us what is going to happen and what programs are going to be implemented. So there's a lot of solicitation and recommendations floating out there, a lot of work going on behind the scenes, but we haven't heard anything official yet.
All right, next question is up. I was going to file 8-week for forgiveness, but the rent was related, so I took it out of the calculation, short about $40,000. Now going to 24-week reporting. The question now is, we paid dividends after the 8 weeks. Would that disqualify you for paying this?
Two-part question. First off, on the rent piece, remember that you only need to remove the profit. So, simple example, if your rent is $200, but your mortgage obligation in the LLC that you've established to own the property is 100. It's a 200 rent, 100 mortgage obligation. The mortgage obligation is still inclusive. So the only thing that has to be removed is $100. profit. So I would encourage you guys to, go back and, look at that again. But independent of that, again, there was the law and interpretive guidance has been silent on paying dividends, distributions, draws, whatever you want to call them. It's basically extra cash. All it's opined on is owner salary, which is literally, your W-2 or your guaranteed payments if you're a partner. You can't apply for more forgiveness than you took in compensation in 2019. It's still silent on, giving yourself a raise. It's just, you're not going to get that as forgiveness. So I don't see a problem with it, personally. Jack?
Yeah, I mean, I agree. Again, it comes back down to the calculations. Work through the calculations to see, because it's easy to get kind of lost in the debits and credits in the formula. So, if you work it out, that's the the best advice that we can give is to look through, because it sounds like that maybe got it mostly right in the question, but not maybe completely. So.
All right, the next question is a long one, so stand by here. Our business recently started using a PPP loan we got a while ago. We're planning on filing for forgiveness under the Safe Harbor FTE Exemption 2, as we laid off our entire workforce in early March. The exemption reads that in order to be exempt from not having employed our normal FTEs during the whole 24-week period, we need to be at the same amount of FTEs we were at on February 15th by the time we apply for forgiveness. Our complication is that one of our employees is unable to come back to work, and we're not sure we'll be able to rehire someone for his role less than 8 weeks are left. If we make him a formal job offer and he declines, and we make good faith effort to hire someone but are unable, are we still able to qualify for full forgiveness under the second Safe Harbor? I know we would if we had employed all of our team during the normal 24-week period. Is there a minimum period of FTE that needs to be employed in this scenario? We are only eligible for full forgiveness under the second Safe Harbor.
You're totally screwed. I'm just kidding. You actually answered your own question in your question, because I think what a lot of people continue to lose sight of is, because we talked about it a lot. Everybody talked about it a lot. Lay people off, got everybody back by the stroke of midnight. Is the stroke of midnight, week after, what happens to them afterwards? But everybody felt like, oh man, I got to be back at the full FTE count. You don't. That's just one of the possible exceptions. If your average FTE count doesn't count, as having all the jobs restored by the time you apply for forgiveness. There are still other valid exceptions. One person can't come back. Sorry, I lost my hand there. The first is the person can't come back because they can't. They're caring for themselves. They're caring for someone who has COVID. There's some other reason that they can't come back due to COVID. That's one. Two, they won't come back, and you try to find a replacement. Which sounds like this is the possible scenario. And then three is business went like this related to COVID, thus the position is no longer available, because they didn't want you to say, oh my God, I gotta hire a bunch of people that I don't need. So I think any one of those exceptions are perfectly valid exceptions. And my own feeling is that the only people who I would not want to be when called before the court, if you were ever going to get called before the court, is the company that took the money, business boomed while taking the money, and yet their FTE count was less and they were trying to apply for an exception. It's just not a good position to be in. But anybody else, I feel like you're, flat, slightly up, all those other things, I think that's a pretty good position to be in. You got any further thoughts, Jack?
Yeah, I think it goes back to, again, going through the form, and based on the question, it sounds like that there are, ways to be forgiven for that. And it was relatively recently in the scheme of things where the provision that COVID related issues being an allowable excuse for not getting up to full strength. And so, and it's a case by case basis. So it goes back to what we've said in the past, which is document it, whatever it is, whether it's an offer that's made that's rejected, whether it is that position is no longer available, whether it is that you can't find anybody that's willing to take the position because of the nature of the work or the nature of the company that they feel like they're at risk. And so you have to, the premise of the good faith of the safe harbors is that you made a good faith effort to do what you were supposed to do what was required of you from the start, which is get back up to full strength. And then they started paring that requirement back for specific reasons. Again, if you've tried to fill it, if you can't fill it, if because you can't find somebody who will fill it, or the position is no longer needed, or because, and this is a subset of those, that it has to be related to, and they're very specific as to a CDC mandate or some sort of health mandate that is not workable within your business. So again, go back to the forms, work through them, make sure that you can check off all the requirements and get to that point where, okay, we weren't back at full strength, but we fall well within the safe harbor rules.
So this was a qualification from the person that talked about hey, we're short $40,000 because rent was related. And they just made a clarification that there was no mortgage on that.
Yeah, this is one of those inherently unfair elements of the new guidance that came out related to owner-occupied real estate and related party rent is that I don't know. I mean, I still go back to why is it okay to be able to pay my landlord who has the same profit motive that I have when I bought the building? Okay to pay them, get PPP forgiveness, but not okay to pay myself if it's an unrelated party. I totally get wanting to make sure that it's a fair market value rent, but that just, I don't know. I didn't make the rule. It doesn't sit well with me. It seems inherently unfair.
Next question from Karen is related. It says, for related party rent, isn't the allowable portion, the interest portion of the mortgage payment, not the entire mortgage payment?
Yeah, Jack is probably best to fact check on that. Basically, they're considering it interest associated with mortgage indebtedness as it was related to the other parts of the CARES Act interpretation. So I believe it is just interest and then the other allowable expenses. You want to fact check us on that one, Jack?
Yeah, I have to pull out my papers from last week. All right, so mortgage interest payments to a related party are not eligible for forgiveness. Okay, mortgage payments to a related third party. Yeah. Rent or lease payments to a related party are eligible, provided that the amount of loan forgiveness is no more than the mortgage interest owed on the property during the covered period. And the lease was in effect prior to February 15th of 2020. So it's a cap on the amount, which, it goes back to something that we talked about last week, which is, okay, now you have to go and have a discussion with your landlord and say, how much interest are you paying on your mortgage? And, that's the amount that's forgiven. So, hopefully you have well, it's related party, but I mean, to go through, and then you have issues of, are you keeping track of all that stuff? And is interest, say interest, but does that include any insurance and other stuff? So I've had some clients who are having a challenge interpreting this, but I have not seen clear guidance as to that, other than what I just said, which is no, it's not the full mortgage, it's the mortgage interest that relates back to the rent forgiveness portion for a related party.
All right, hopefully that answered your question, Ken. Joe, when 24-week forgiveness was made available, what benefit is there for anyone to use the 8-week calculation?
Assuming that you don't have any qualifying exception, it's just the ability to use the short form. I mean, there's no other, the easy form, there's no other, I don't know of any other benefit outside of that. Is just the ability to simplify the calculation and, you know, do one page and check a couple boxes and crap's off to the races.
Yeah, peace of mind, essentially. I mean, there is the possibility that they change something so that, you know, if, for example, you in that 8-week period were okay with getting 80% forgiveness and taking a 20% loan, maybe, but you would likely have the opportunity to, if they change the rules, to then reclassify that 20% as being a grant rather than a loan. So again, there are going to be those who said, oh crap, I should have waited, you know, likely, if they weren't 100% forgiven. So Tanner's point is, if you're in the money, you've used the money, 100% forgiveness, there's not any more benefit that you can get out of the program, then that would be why.
All right, next question. Sorry I joined late, so if this question is already asked, I'll review this webinar later. Do you have an answer regarding federal payroll tax window? Are these truly being waived entirely, or are they just being deferred until the end of the year when the employees file their tax return? Yeah, we went into pretty in-depth conversation with that on the front end. Anything you guys want to recap on that?
Yeah, other than just for this person specifically, go back and listen to the beginning of the webinar and don't do it.
Yeah, just save yourself. Don't do it. All right. Next question is on related party rent. Man, a lot of good questions on that. Can use, but not in excess of the interest party or property, i.e. if the rent is $1,500 and the interest is $1,000, then the limit is $1,000.
Yeah, that's correct.
Okay.
Until they come out with, you know, some sort of restrictions on usury laws, and just kidding.
All right.
You know what they didn't get into is, what if I sold it to myself? So anyway.
All right, next question for Twinette. My question is related to owner-occupied rent as well. I should have changed the graphic on this one today. It should have been more on rent instead of the payroll caution tape. This is good. Prior to applying for PPP loan, we had 2 loan payments, one for SBA, the other for the bank. I own the building and rent to my practice. Shortly after receiving PPP loan for the SBA waived 6 months of their loan payments. Based on their previous questions, does this mean the SBA's portion is no longer allowed for forgiveness? I originally applied using the rental amount, which included both SBA and bank's portions.
Yeah, so I'm going to go ahead and say I don't know, but I'm going to walk through the question and see if I have the facts correctly. So in this scenario, you use the SBA program to acquire the real estate, and you were given 6 months no payments. So in that scenario, since you were given 6 months no payments, there's no interest during the period. So my gut feeling would probably be, if that's a scenario, I mean, you don't have any interest that you actually paid. So probably not going to be there if I interpreted the question correctly.
That sounds accurate. So I'm looking at the question again. So again, these programs are subsidies. If you don't incur that expense, it's not meant to put you in a better position necessarily than you would have been otherwise. So if you didn't incur that expense, there's no subsidy. So from that perspective, that yeah, I mean, there would be, and understandably, you applied with the facts and circumstances at the time that have changed. So it's not that you get to have a gotcha moment and get to keep the money or be granted forgiveness for something again that wasn't incurred. So I don't know that is the way this would turn out, but it seems logical that that's the way it would turn out.
All right, next question is, so if I'm understanding the discussion correctly, I should hold off on filing a 24-week PPP forgiveness loan if we've already used all of our PPP funding. If so, when should I actually file the forgiveness paperwork?
Good question. Want to dispel a couple things here. So, using BGW as an example, we're going to hold off on filing for the application for forgiveness until all this tax stuff gets resolved. Yet we're going to use the 8-week period. So what happened with the guidance that is confusing a lot of people is that they extended the window of time before you had to start making payments on the loan from 6 months to 10 months. And at the same time, they also said you got 8 weeks or 24 weeks. Didn't really talk about the gap in between. So, based on the examples that have come out from the Department of Treasury that you can find out there, our current interpretation is that, you've got up until 10 months to go ahead and make your application and submit it for forgiveness, and then the bank has 60 days to go ahead and prove it. As long as you're within that window, then you're not going to have any payments associated with it. So with respect to the forgiveness paperwork, I've kind of looked at it as, apply for it on the first day that would then push the actual forgiveness receipt from the bank into the next calendar year, as it stands right now. Because within that window, you shouldn't end up incurring any form of payment because of the change from 6 months to 10 months.
Anything you'd add to that, Jack?
Sounds good to me.
All right.
And I bring that up because we did have an email that was forwarded to us from a bank that said, hey, by the way, your payment's going to be due coming up here, so get your forgiveness application. And I'm like, what you talking about, Willis? They extended this to 10 months. Therefore, nobody should have any payment due until 2021.
Those silly bankers. We do love you. So have you guys heard anything about owners going back to the SBA and asking for more EIDL money above and over and above what was already loaned? I have a client who called them and they sent an application link to complete.
I haven't.
I haven't either. I mean, I guess it makes sense if you haven't used up all of your capacity or, within the formula that you could, but I don't know. I haven't heard of anything. I'm not aware of any portals that have been opened up for a second bite at that apple. So I don't know.
Any other questions out there from the future or the past or the present? I'm not sure what time warp we're in. Do you know?
There's no time warp. We're just in the 23rd century. Seriously, come on.
Well, the Panthers did win the Super Bowl. That's why it was.
I'd also like to point out that we're not on the Kelvin timeline. We're on the original series timeline. Seriously, this is embarrassing.
I know. Well, look at me. I mean, I'm not even fully whole yet. So, any other questions out there before we sign off with the Vulcan mind meld or whatever? Live long and prosper.
I'll bring up one thing while we're waiting for a moment, not to extend the time, but this has come up there was an interesting discussion within my firm from different offices with respect to the residential tenant issue and the government saying, yeah, you can't evict people. And they're very specific as to who that applies to. Even though, and I thought it was interesting when they first started talking about this, I'm like, where does the authority come from to be able to, the government to say, hey, private business landlords, you can't kick people out of your space. And interesting where it came from, which is the CDC. And it is basically saying that, you know, in the interest of, I had the language here somewhere, but in the interest of slowing down and stopping the spread of COVID-19. So in the interest of our citizens and other people in the United States, we can't have people out on the street. So that was their way in. There was a discussion yesterday about the enforceability of that and whether the CDC has exceeded its authority. And I bring this up necessarily because, you know, for your employees and maybe for family members and other stuff, because again, we're talking about residential, but they talk about limits that you can't earn more than $99,000. And they also make it clear that it's money related. So if you are getting evicted for other stuff, that doesn't stop that. If you were in the process of getting evicted because of non-payment, it doesn't dismiss the case. It may put it on hold. So it'll be interesting to see how judges in various jurisdictions deal with this. I know that some of my partners in Charleston, so in South Carolina, were reporting that there is a meeting amongst the judiciary there to decide how they're going to interpret this in their courtrooms. So just, you know, there's plenty of information out there about it, but I don't know if it's going to be enforced or how it will be enforced. But that's the gist of what happened in relation to that CDC proclamation or order that's out there.
All right, for everybody who has hung in there with us, thank you for taking time. Oh, we got another question here. Hold on. Toinette, are you able to refinance a mortgage loan this year if you haven't submitted the forgiveness paperwork yet? The SBA is going to charge me the fees and payments that were waived for 6 months. If I refi, then I can use that. Can I use that money for forgiveness? It's around $15K.
That's it. It's a good question. Again, if you got some killers here today. So if you think about it, what's going to happen? You're going to get a, you know, the bank that you're doing the refi with is going to have an amount, and then they're going to have to call to get a payoff amount, which is going to be your ultimate loan amount, assuming that you didn't take, assuming that it's a swap and you didn't have any refinance. Meaning, sorry, you didn't take any additional cash out as part of the refinance. So my assumption would be that if the SBA, because the SBA wasn't trying to, the SBA is never trying to get enriched on this, on any SBA-backed loan. It's just, look, they're trying to be, you know, backstop so the commercial lending world can keep on moving. So my feeling would be that if the SBA has a payoff amount that's inclusive of the 6 months of forgiveness, that's probably going to be your new principal balance. So I'm not going to try to go, like, I haven't heard of anything that says, oh, by the way, if you get out of the loan, then we're going to come back after that 6 months. Now, if you did a refinance in the middle of the 6 month window and only 3 months had gone by, could that get messed up? Probably, but what do you think, Jack?
Yeah, I think that it's a lot of speculation in that there's a lot of internal rules with banks and with the SBA that they have to process and make interpretations on with respect to how things might turn out when you're kind of in a transitional period. I mean, it was that the forgiveness application hasn't been submitted, but are you at 100% forgiveness? And so it's really fact specific, and you know, we can make certain assumptions, but it will depend on how the zigging and the zagging of your SBA officer and the lending officer of the new lender, and what are the requirements with respect to the loan that you're paying off, because obviously the bank that you're paying off is going to want to be able to keep the money and not get it clawed back for whatever reason. So there's just a lot of moving parts and pieces and people that have influence and input into that process. So it's again challenge for us to say this is how this will turn out, because there's just too many moving parts to be able to say one way or another. But Adam identified a lot of several of those moving parts and what might happen with that.
Well, everybody, you asked a bunch of really good questions. No softballs in this one, so that's good. Thank you for doing that. If you were not able to be on the front end of this thing, we will be posting it, as Jack has up in his screen, on the BGW CPA YouTube. Thank you for that shameless plug for us. And we need to put the Shoemaker logo. You're gonna have to send that to me, and we'll do that. Thank you again. I hope you guys have a safe and wonderful Labor Day weekend, and live long and prosper. We're out.
Got it.